Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, we're very pleased you joined us for the Battery and Precious Metals Conference. Our first presentation is from Dore Copper. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Ernest Mast. He's the President and Chief Executive Officer of Dore Copper Mining, which trades on the OTCQB venture market under the symbol DRCMF and on the TSXV under the symbol DCMC. Welcome back, Ernest.
Thank you very much, John, and a pleasure to be here at your Battery and Precious Metals Conference. I'll be going over the company, the company's prospects, and the investment thesis, which we have. So very glad to be here. I'd like to start by talking about high-level aspects of our project. Our project is unique in that, in many ways, we check a lot of boxes. So for instance, we're in an excellent jurisdiction, which is Quebec, located approximately 300 miles or 500 kilometers north of Montreal. This is a brownfield project, which makes it lower capital intensity and really a lot less capital risk than you would have with a greenfield project. The infrastructure we have in place includes road access to all the mines and the mill, power connection to some of the mines and the mill. We also have a mill in place. We have a tailings facility in place, and we're only about 6 miles or 7 miles away from the town of Chibougamau, which is really a mining town. We have a positive PEA in place, which is a preliminary economic assessment, and that details out a very profitable and robust project with a 10.5-year mine life, producing an average of over 50 million pounds per year of copper equivalent at an all-in sustaining cost of $2.24 a pound, and a relatively low initial capital cost of $180 million Canadian. Our team is experienced. We've worked throughout the Americas. We've worked in Quebec. We've worked in copper. We've worked in gold. And we have experience in underground mining. And finally, our project is high grade copper. We also have some high grade gold deposits. And for underground mining, grade is king. It's really a defining factor of our projects that they are as high grade as we have them. In addition, we have a lot of exploration potential to increase the size of the resources and also to make new discoveries to add on to the existing resources, because what we're looking to do is implement a hub and spoke arrangement where we have a number of mines feeding a centralized mill. This mining camp has been in operation starting in the late 1950s. And in the past, there were 2 mills in the camp. Now there's only 1. But when those 2 mills were operating, it was always operated in a hub and spoke arrangement where there were 2 or 3 mines feeding a mill at a certain time. In terms of the capital structure of the company, you can see the graph here. We have 2 main shareholders, Equinox Partners and Ocean Partners, owning a little over 50% of the company, very supportive shareholders. We have Quebec funds at 7%, insiders at 5%, and the rest being in other institutions and retail. We currently do not have any debt, and we also have a cash position of a little over $4 million and a market cap of about $19 million at the current time Canadian. We have coverage with Paradigm, which is a Canadian brokerage. As I mentioned, we have experienced leadership in place. Most of our team members have worked in Canada, in Quebec, in relation to underground mining, open pit mining, whether it's copper or gold. I'm a founder of the company, as is Mario Stefano, our executive chairman. And we started the company in 2017 as a private company. and we went public in 2019 at the end of 2019, and we've been with the project ever since. We've seen the team grow. We've added a number of key members to the team. The board of directors is a very balanced board of directors with technical, community, and financial expertise. Brent Omlin, as a board member, is representing Ocean Partners, which is the largest shareholder, and they also have our offtake agreement. Now, we're at a battery metals conference because we're here to talk about different battery metals. And as you know, there's a number of different materials which are considered battery metals. We're focused on copper, and we believe copper is really the key to the energy transformation and electrification which is occurring, because it's really agnostic to the technology which is implemented, whether it's solar, whether it's wind, and depending which, it doesn't really matter which type of battery electric vehicle is implemented, you do need copper, because copper is the best conductor of electricity, only second to silver, but the price of silver makes it prohibitive to use in most electrical applications. So therefore, we need copper for this electricity or for this energy transformation to occur as it's happening. Copper has some other extremely good characteristics, such as very good on thermal conductivity. So therefore, when it's placed in computers or batteries or electric motors, it dissipates its heat, making it a very good material to use. It's ductile and machinable, therefore it can be formed into really any shape. It can be drawn into relatively thin wires, which is what is used in most applications. Has a certain amount of corrosion resistance, and it has some architectural uses as well. We've all seen copper roofs. And finally, it's recyclable. It's infinitely recyclable. And so it gets into the economy and it becomes part of the circular economy. Even with a high level of recyclability, however, there is new copper units required from the mining industry in order to keep up with the demand of copper. And on the next slide here is a projection of supply and demand of copper going forward. And this shows a very large supply gap, which is going to start to occur in a couple of years. And it's just going to grow over the next decade or so. And the supply gap is there for two reasons. First of all, copper's compound annual growth has been about 2 to 2.5% for the past 30 or 40 years. And that's been that's a result mainly of urbanization occurring in the developing world, China in particular. But now we're seeing a different phase occur in the copper industry. And that is that with electrification occurring, we're starting to see growth of copper consumption in the developed world as people buy electric cars, as there's more solar, wind installations going in. And then there's continued urbanization of developing countries, but it continues to occur in China. But however, we're starting to see much more growth in developing countries such as India, Indonesia, certain parts of Latin America and Southeast Asia. And that's going to continue the trend of 2 to 2.5% growth. Now, on the supply side, that's where the industry has found itself very challenged. There used to be one or two copper discoveries a year prior to, say, 1990. Since then, the number of new copper discoveries have really petered out. And what you see is old projects being rehashed. These projects tend to be more remote, lower grade, and smaller than the projects that we had in the past. And then an additional complication is that it's much harder to permit projects. There's a number of projects, for instance, in the United States, which essentially have been stalled for well over 10 years and unlikely to ever be built. And that's occurring all over the world. So the big question is, where is that new supply going to come from? And we think Dore Copper is a great example of a project, although small, located in a very favorable jurisdiction. It's underground and high grade, and it's a brownfield. So the impact to the environment and the impact to the community is minimal. And that's why we think our project really fits well into this thesis of requiring more copper in the world. Now, to talk about the technical merits and really what we have, this is a map of the claim area of around Chibougamau. As I mentioned, it's 300 miles or 500 kilometers due north of Montreal. You can get there driving, of course, but there's also commercial flights 3 days a week from Montreal. The three properties, or the properties that we have, are located all within about 40 miles or 60 kilometers. The key property is the Copper Rand Mill. The mill was built originally in 1959, and there were a number of additions in the 80s and 90s. And we've done some refurbishment of the mill, and that's the mill we're going to use for our treatment. Our principal mine is the Corner Bay Mine, which is located 20 kilometers due south of the mill. It's going to be 45 kilometers by road because there's a lake that we have to drive around. And 5 kilometers away from Corner Bay is the Devlin deposit. Both of those deposits are principal copper deposits. About 20 kilometers south of that is the Joman deposit, which is a past producing gold mine. It does have some copper, and it too was treated in our mill. And then in the area around the mill is what's called the Central Chibougamau Camp. And the Central Chibougamau Camp is where the majority of the ore feeding the mill historically came from. There's maybe 12 or 13 past producing mines in that Central Chibougamau Camp. They all are copper and gold, very low other impurity metals. And that's the basis of our hub and spoke, where we'll have a number of mines feeding the centralized mill, Corner Bay being the cornerstone mine in the current plans that we have. And that results in production of over 50 million pounds per year of copper equivalent over 10 and a half years. This area is considered the north of Quebec, as it's north of the 49th parallel. And we also have additional tax credits available to us for exploration, and that makes exploration very cost effective for us. As I mentioned, we did a PEA. We completed that in May 2022. And you can see some of the metrics around the PEA in this slide. The base case project, which was done at a price of $3.75 per pound copper, showed cumulative cash flows 455 million Canadian on an after-tax basis, and 747 million pre-tax. The initial capital cost is $180 million Canadian, and our project is one of the least capital intensive projects in the industry. And the reason for that is a combination of taking advantage or utilizing the existing infrastructure in place, and also the fact that it's a high-grade mine, so you therefore get more production for the same amount of processing capacity. We have some opportunities to improve the economics and to improve the project, and that is because we're not using 100% of the mill capacity that we have. And our concept is, as we get into operation, we would do exploration and find other deposits or extend other known deposits, and therefore extend the hub and spoke and increase production by utilizing spare mill capacity. Some of the metrics on the project in the table worth pointing out is the average diluted grade copper equivalent is 3%. And we have annual production of over 50 million pounds per year of copper equivalent, an all-in sustaining cost of $2.24 per pound. That's in US of copper equivalent produced. Therefore, in an average year, we would be cash flowing at a price of $4.24. We'd be cash flowing $2 per pound, or $100 million US per year once we're in operation. And it doesn't take a genius to figure out the math that with $100 million free cash flowing, we would pay back our investment. And in addition, we'd be extremely profitable going forward. The after-tax rate of return is 22.1%, and that's at the $3.75 copper price. At a $4.20 copper price, the rate of return climbs to nearly 30%. Right now we're at 440, so our internal rate of return after tax is well north of 30% as we speak. Now, one of the competitive advantages we do have, as I mentioned before, is this is a brownfield site. So in the map on the lower left-hand corner, you can see where the mine site, the Copper Rand Mill is, in relation to the town of Chibougamau, located about 6 miles or 10 kilometers away. It's a 10-minute drive, so usually when I'm at the site, we can go into town for lunch. Makes it a very easy commute for any of our workers living in the town of Chibougamau. The tailings facility is located about a mile away from the mill facility. So we're using existing infrastructure. There's also a bypass road to the south of the town of Chibougamau that any ore trucks coming from Corner Bay or Devlin would use in order to transport ore to the mill. As I mentioned before, we're connected to the Quebec grid. This is a fully hydroelectric grid, and therefore our carbon footprint for this project will be very low. We also have had very active engagement with the town of Chibougamau and the First Nations community of Oje-Bougamau. Those towns, especially Chibougamau, was built on the back of these mines, and the people in the town are very nostalgic about these operations. And whenever I go, I always run into people from the town inquiring about when is the mine going to start up again and how nice it would be for Chibougamau to become a mining town once again. The town of Chibougamau has incredible infrastructure. It acts also as a government center for the whole north of Quebec, and as a result, there's a good hospital, there's good schools, and in addition, there's a training facility there owned by the Quebec government. It's called the Centre de Formation de Technique de Chibougamau. So that facility is a natural training facility for our workers. Currently, there's large mines in Quebec owned by Hecla and Newmont who use that facility to train all of their workers, and we plan on doing the same thing. And that's going to address some of the worker challenges that the mining industry currently has. On the processing side, the Copper Rand Mill is shown here. It's the beige building on the right-hand side. That mill was originally built in 1959, and then it was expanded in 1981, 1984, and then again in 2001. And so we have over 3,300 square meters of floor space. We have more than enough to accommodate our process. We plan on retrofitting the mill to make it operate like a mill from 2024. So one of the things we're going to do is we're going to replace one rod mill and 4 ball mills with one new 1,500 or 2,300 horsepower ball mill. And that's going to allow us to have much better process control, much more control on the grind size. We'll be more energy efficient, and we can probably operate the mill with less manpower than was done in the past. And then throughout the process, we're going to look at each piece of equipment and decide how to refurbish it or replace it. In most cases, we're just going to be refurbishing the existing equipment because it's in good shape. You see some Denver 200 flotation cells on the lower left image, and those cells really just need to be refurbished. They just need a little bit of grease and a little bit of cleaning, and they're ready to go again. Because it's a brownfield project of this nature, we're going to be able to self-perform some of the repair tasks, and we've already started to do that. And that's going to be a lot more cost-effective compared to bringing in a contractor from outside and having them do the repairs. So we're currently working through all of those items. Now, in our overall capital cost of $180 million, 50 54 million of that is for processing. That's broken down by 12.6 million at the Corner Bay site, where we're putting in a crushing circuit and an ore sorting circuit, 17 million for a new tailings filtration addition to the mill, and then 24.8 million for the refurbishment and the upgrades in the existing mill. Having or building a new mill of this capacity from scratch right now, the cost of doing that would be in the order of $150 million. So you can see that we're being very economical by reutilizing the existing infrastructure. And really, at the end of it, we don't anticipate to have any weaknesses in terms of a new facility. Another important installation for us is the tailings facility. This tailings facility last operated in 2008. There is a beach which is about a mile long and about 400 yards wide. We plan on doing a dry stack technology, which means we filter the tailings, we place the tailings on top of the existing tailings beach, we compact them down, and then we just put a few levels on top of it. We have enough capacity in this area for about 2 or 3 times of what we've put forward in PEA. This is a very environmentally benign manner of treating your tailings or handling your tailings. Almost zero geotechnical risk involved in this type of methodology. And again, it gives us an advantage. Plus, we're not clearing any new land to do this tailings installation. As I mentioned earlier, Corner Bay is our principal mine for the hub and spoke operation. We're going to mine it with traditional mining methods, long hole open stoping, either with pillars or an Avoca method, which just means kind of continuously going through the vein. The deposit's very amenable to that type of mining because the host rock is a very competent rock called an orthosite. It's slightly weaker than a granite, but still a very strong rock, and we have a very strongly delineated vein. And so on the underground mining side, it's a very traditional type of methodology. On the lower left-hand corner, you see the road route that we're going to take from the Corner Bay deposit to get to the highway, which would then get to the mill. This internal roadway is utilizing existing logging roads for the majority of the route, and it cuts down the distance to the mill from Corner Bay to 47 kilometers. Another highlight about Corner Bay is that we've had great exploration success at Corner Bay. We've increased the size of the resource from 1.5 million tons when we took over this project to 8.6 million tons, and we've kept the grade pretty well constant during that time. Post PEA, we did additional flotation test work and sorting work, which confirmed that the sorter byproduct or the sorter waste is at 0.19% copper. So it really doesn't make sense to transport that to the mill. And then on the metallurgy side, we confirmed higher concentrate grades than we had in the PEA study. And in addition, we confirmed very low impurity elements in the final copper concentrate. And that's going to be very beneficial to us in terms of marketing the product. At Corner Bay, we have a lot of exploration potential. So we just acquired some new land to the north and the east of Corner Bay. And this new land already has some copper mineralization identified. And we plan on drilling this very shortly. That's our target with the money raise or the financing that we had just done. The veins that exist in the new land, in the new area, have a number of intercepts over 10% copper, making it very high grade. They're relatively thin at 1%, but still, if you're over 10% copper, it's going to be very economic. This land is part of a joint venture with Pan American Silver, who own 44%, and we own 56%, and we're the operator. The Devlin deposit is a horizontal deposit, and it's going to be in operation for about 4 years. Once we get started, very similar mineralization to Corner Bay. And so it's a wonderful opportunity to start both of the mines up at the same time in order to get enough feed in the mill as we ramp up and start up. The Joman deposit, this is principally a gold deposit located 60 kilometers south of the mill. We have a very large land package with over 6,000 hectares. Part of the land package is part of a joint venture, which we have with SOCAM. And here's a little more information about Joman, where past production was 1.2 million ounces of gold at 8.26 grams per ton gold. It closed in 2007, and there's a lot of exploration potential at depth, and we could probably identify, we're hoping, about 500,000 ounces a year, and it can contribute quite a bit. So we currently have a three-step approach where we're progressing work on the feasibility study as we talk. We continue on with the permitting process, which has started, and we're drill testing some quality exploration targets. And the quality exploration targets, I'll be quite brief about it, but feel free to reach out to us to talk about this in a little more detail. But we have some excellent targets in the central camp, which are very close to the mill. One of them, Cedar Bay Southwest, which we drilled earlier this year and hit copper mineralization where we thought we would. Another exploration target is the Gwillim deposit, which is about 14 kilometers north of the mill, high-grade gold. We've had numerous intercepts over 10 grams per ton, and we're currently looking how to do a resource on that. I'll go to some questions now, and then the first question is, what's the history of the site and the state of the infrastructure? Very good question. So the site's history dates back from the late 1950s, and this was a very prolific mine site. The Chibougamau camp produced over 2 billion pounds of copper and nearly 2 billion pounds of copper and over 3 million ounces of gold. The state of the infrastructure is very good. We showed a couple of photos in the presentation, and we've also managed to repair some things that maybe weren't in the best condition. So the infrastructure is good going forward. Another question is, can we discuss the production time and the capital needs to support? So the production time, we could be in production, pedal to the metal, in as little as 3 years. Some of that depends on financing and the copper markets itself. But we are in the feasibility study and we are in the permitting process right now. The capital needs are, we need approximately another 10 million US or 13 million Canadian to complete all the feasibility studies and all the permitting. And then we would get into the project phase. And then final question is, do we expect the feasibility study to support the 2022 PEA? And yes, we do believe that it's going to support the PEA very well. We're in a higher copper price environment than we were when we did the PEA. We also will have an advantage in that we plan on adding silver into the economics. We did not have silver in the 2022 PEA because some of the historical resources that we had did not include silver. We've been working on incorporating the silver assays into the PEA, and it looks like we'll probably have about 1 million ounces of payable silver over the life of the project, which adds about 32 million US kind of free cash flow to the project. We've also come up with a few ideas on how to configure the mill a little more favorably than what we were considering and doing in the PEA. So inevitably, there was some cost increases that have occurred since 2022, but we have some ideas to compensate for that. So I'm expecting the overall project to be very similar between the 22 PEA and what we're planning on issuing. In addition, there's always exploration upside for us. So the PEA or the feasibility study will not be the final say of this project. We will identify new resources, and we do have additional mill space. And so we can anticipate that we're doing this project, we're doing the feasibility to get started, and then like a lot of other underground mines, we're going to find additional deposits in the area, and that's going to improve us considerably. Thank you very much for attending the conference. I have about 10 seconds left before my time allotment is out. If you have any further questions, please feel free to reach out to myself or our Vice President of Investor Relations,